Wow, that number doesn't even make sense to me. Wow. So this has been pretty interesting week for Tesla. Actually for a lot of tech company as well.
What's up everyone? Hope you are all safe and sound. Welcome to Random Walk Finance channel. My name is Alfredo. In this video, I'm gonna give you a portfolio update on my SEP IRA account on M1 Finance and also what I use Expert Pi in my portfolio, especially Berkshire Hathaway equity holdings. Let's begin. The SEP IRA account right now, the current value is 29,000. Again, it's 6,000, a little bit above. The return is 94%. Again, that's a money weighted return, which is internal rate of return. It's very useful metrics when you are sort of figuring out your contribution in a various different time versus how well each of those made. This is not looking at what you initially started out with, because ultimately when I started out, I only started out with $250. But since then, the different time I add money and how that performance well does that. But the overall simple return would only be about 25%. It's still a positive, but that's just a way to kind of give you better metrics rather than looking at simple number. Now, my SEP IRA account has 4 different slices or pie, as you call it. So one of them is Tiger Global Management. Second one is Coatue Management. And I skipped the last one. It's called Berkshire Hathaway. I'm sure y'all know what Berkshire Hathaway is, Warren Buffett company. So the 3 I mentioned is actually using the Expert Pi that M1 Finance comes with. As far as I know or have my research, I almost never seen anybody talking about Expert Pi or using them. It's almost seen the one I have found are actually against it. So I do found that a lot of Expert Pi on M1 Finance are kind of pointless or useless. You could just essentially add those ETF yourself or other kind of more dangerous ETF or Pi you probably should stay away from. But these are hedge fund section if you check, and I'll show you here. I would definitely recommend checking them out if you're a beginner who had never invested before. I personally thought that using these hedge fund would have been a terrible idea. I mean, yes, I definitely like picking stock myself. Who wouldn't? But what I found is that the Tiger Global Management and Coatue Management, which I would like to do a separate video in the future about these 2 separate companies, I realized that their focus are a lot of technology, but mostly in the consumer sector. The more I dig into it, they're not just hedge fund, they're actually venture cap, write checks to a company like Facebook and LinkedIn before they even become a public company, and then went on to hold those companies. So they are more of a visionary in terms of, taking these extraordinary amount of risk in early on these company. And so some of these companies that they're holding right now, they have actually wrote a check in early stage or late stage and then take them to public. So Peloton is one of the examples that Tiger Global Management holding does have. Turns out they had invested the company prior to IPO. So is Eventbrite, so is other company. So that's something to keep in mind. Let's take a look at Berkshire Hathaway Expert Pi in my portfolio. It currently accounts for 20 to 21%. And this week, it has gone up 3% while other slides are down or flat. The market has done really well for Warren Buffett stock holdings, mainly due to banks' quarterly earnings reports came out this week, especially for JP Morgan Chase. Okay, not so much for Wells Fargo though. Wells Fargo shares actually tumbled 5% after posting $2.4 billion loss. And on top of that, they slashed dividends down to 10 cents. Since I have invested additional $300 into this pie to cost average the underperformance in this holdings. And in case you're wondering, I don't always invest the same target percentage of Expert Pi have allocated, which do fluctuate quarterly due to their 13F filing with SEC. Last one was reported on May 15. The next one is likely due on August 15, and a target allocation will likely change. At May 15 though, last quarter filing, all the airline stock, United, American, Delta, and Southwest all have been liquidated, but with a new added holding of Amazon, which is pretty exciting. So what I did is that I have overweighted Amazon since then, 1% to up to 3%. I'm hoping that Warren Buffett will continue to increase its Amazon holding, hopefully up to 10%. The largest holding for Berkshire Hathaway is still Apple, accounting for a whopping 37%, and that's more than what Apple's market cap weights in S&P 500, which only account for 6%. The oracles know something that he's doing,
And you know what? I'll just let them do their thing. So while I can Netflix and chill and invest with him. Just to interject real quick. So according to CNBC's article published just a few hours ago, Berkshire Hathaway's Apple stake, which is now 40% of its equity portfolio, it's up a whopping $40 billion since the market bottom in March. His massive technology bets since May 2016 has definitely paid off for Berkshire during the pandemic, while his other part of the business such as energy or insurance took a huge hit. According to the CNBC article, the Apple stake cost Berkshire about $35 billion or $141 per share, and Apple's price as of today is $386 per share. Bershire's entire stake in Apple stock now worth a total of $95 billion or 245 million share. That's a lot of share, and become Apple's second biggest shareholder just behind Vanguard. So he does not make small bet whatsoever. The article also mentioned that the Berkshire owned about 533,300 shares of Amazon since March, now worth about 1.6 billion. Hopefully they keep adding more. While many would view this as Warren Buffett's finally warm up to technology stocks, but I personally argue that's simply not correct. Instead, Warren Buffett is still very much loved to invest in great business that has great consumer brands with loyal customers, just like when you bought Duracell from Procter & Gamble and Gillette. So what do I plan on doing with this Berkshire Hathaway expertise in M1 Finance? Well, I plan on keeping for as long as I can, adjust its target weights, cost averaging down as I go along or investing. Companies like JP Morgan Chase, Costco, they're a great company. In this holding, I don't plan on selling anytime soon. I'll likely overweight Amazon though, up to 10%. If any of you invest in Warren Buffett's stock holding right now in your portfolio, which one would you invest more? Reduce holding or remove it completely? Definitely comment down below and let me know why. If this is your first time here and you want to learn more about investing for the long term, looking for interesting company to invest, other personal financial stuff, start now by subscribing and clicking that bell icon so if you don't miss anything. Leave a like if you find this information valuable, and definitely subscribe for more content like these.